Now on the second property, we've got a $670,000 asset. This was a short-term rental in Florida, $670,000 asset. Again, had she not done cost seg, she would have got a $24,000 write-off every year, which is great for the next 39 years on this example. When we did cost seg, we were able to take this 670,000 and we were able to identify $159,000 worth of short-term assets in the 5-year category. Because this was a condo in Florida, she didn't actually own any of the land improvements, but we were still able to segregate 24% into the short-term buckets. We take 80% of that in year one, and now year's one deduction is $143,000 versus a $13,000 deduction. So on this property alone, she saved $45,000 in taxes. Let's look at them combined. When you take both those and we summarize that, we had $849,000 worth of buildings in these two buildings at an 80% bonus rate. We increased the depreciation by $210,000 by going in and putting values to the carpets, countertops, etc. We created a $77,000 tax savings, and the fee for us to do those studies was around $6,000. So pay 6 to get 77 back. I'll take that all day long. Now, remember, some of this tax savings does get paid back.
Let me stop you right there, just to make sure that it got nailed in. So how much did I pay? $3,000 per property?
Yep.
Okay, you guys get this. So I paid $3,000 for a cost segregation study on one property, and if you go back 2 slides, it saved me how much? $40,000 in taxes?
58.
58. Or not in taxes, but in taxable income, right? And then the second property I paid $3,000 for. Of course, there was a much more expensive property because it's by the ocean, but it saved us $140,000, almost $150,000. So let me get this straight. If I didn't pay $3,000, so let's do the math just for kind of, what do we call it, shits and giggles, okay? Let's do the math. I paid $3,000 to save $150,000. If I didn't save the $150,000, I would have paid 37% on taxes. I would have paid in $55,500 in taxes just on that property, right? Like I would have paid taxes on the amount if I didn't do the cost segregation. Let me put it that way.
Yeah, and I actually calculated a little different, Gogo. We calculated a 39%. So on the 210,000 that you saved, so we increased depreciation by 210,000. So you take that times your tax bracket, Gogo, you actually saved about $77,924.
Okay, so let me ask you guys this way. You cannot do this, and you cannot buy real estate. That is your prerogative, that you're entitled to it. You can pay full-blown taxes to Uncle Sam like most of the people do, right? Or you can get smarter. You can buy real estate, pay an extra $3,000 per property for a cost segregation company to do the engineering study, and then in return, you pay $77,000 less in taxes. Which one should I do?
Easiest sales job I've ever had, Gogo. It's just a matter of educating people on this, because a lot of people they're not aware of it. And so,
and this is what I'm trying to preach. Like, I am so surprised that only 15 people are here today, right? Because that shows you that most people are stuck in the process of making money. They're not even concentrating on what to do with that money. And they're going to get so far up in, there's going to get beeped so far up in the beep, right? When it comes to taxes, then it's not even funny. Like the problem is that we are taught hard work equals money. But then if you think about it, how many people do you know that work so hard on a 9 to 5, right? Or 8 to 5 or whatever, and they can barely pay their bills? Hard work does not equal money. Getting smarter and doing things smarter is what equals money. And eventually that money that you worked hard for, you need to put it to work hard for you for the rest of your life. And this is where these lessons come in. It blows my mind that most people are not even here to learn this, because that tells me that the money that they work so hard to make, it's going to go out at the back end. And then what's the point of making the hundreds of thousands or the millions if you're going to just give it away at the end? Like, we all have to learn to get smarter and learn to play the game. If these tax write-offs are readily available for us, we just need to learn to use it. And I'm excited for the ones who are here today, because we are going to be the one who spread the world, right? The word. We are going to be the one who going to be able to use it for ourselves, and B, we're going to be able to teach our agents, because many of you here have your own teams and downlines and organization, but also teach your clients to do the same. And when you can bring this kind of information to your clients, do you think they're ever going to negotiate your commission if you just save them, I don't know, $40,000 on one property alone? Do you think they're going to ask you if you should reduce your commission? What do you think? Probably not.
No, that's a great.
This is like, I know what I bring to the table. I know that I can make you money. I know I'm not going to cost any investor money, because I can make them money.
Yep. No, that's a great point. And as you guys, for those of you who are agents, it's a great way. If you guys have a client who's looking at an investment property, we always will do a free analysis so that you can share preliminary numbers with them before and say, hey, if you buy this property, you're going to get a $159,000 write-off, and you happen to be in a 37% tax bracket. Well, that equals a $60,000 tax savings. You can have that conversation, and that will differentiate you as a broker from the competition. Because I guarantee they're not hearing that from the other brokers. And so it's just a great way to differentiate yourself. But you can see here as a real live example, Gogo was coming out of pocket $77,000, whether she was going to write the check to Uncle Sam or she was going to go take the 77, go put it down on a new property so that she has properties that next year she can do cost segregation on. So just different ways of spending that money, but a lot of us would much rather spend it on revenue generating properties that are going to appreciate over time. They maybe will cash flow while we own them, but keep your money versus giving it to the government is the idea there.